This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Big technology stocks getting hit in late trade as Microsoft's results fuel worries that the AI frenzy that's powered a bull market has gone too far. Japanese stocks set to fall as a national broadcaster says the BOJ is discussing a possible rate hike today. Benchmark bonds also set to face pressure. Plus, China's powerful Politburo pledges to make boosting consumer spending a greater policy focus in the battle to kickstart growth. Ahead of all of that, we do have breaking news just crossing the Bloomberg. South Korea industrial production data just crossing the terminal now. We're getting that year-on-year number for the month of June, beating expectations by quite a margin. 2.8% was the expectation, 3.8% is the print we've got, and certainly an acceleration from that 3.5% in the previous reading. That seasonally adjusted month-on-month number coming in at, again, of 0.5%, slightly softer than expectations of 0.8%, but a bounce back from the contraction in the previous period of 1.2%. So when it comes to this sort of beat on a year-on-year number, likely that rebound was mostly due to increased chip output in particular. Semiconductor exports, we know, surged over 50% from a year earlier, but that inventory adjustments, though, according to Bloomberg Economics, may be over. So we may see manufacturers needing to produce more, and that would obviously affect these IP numbers going forward as well.
Heidi, take a look at how U.S. futures are coming online in the Asian session. Of course, you mentioned that sell-off we saw in the tech sector. We're talking about Microsoft plunging after its cloud revenue underwhelmed. That in late trading, Nvidia was also falling, although it did reverse some of those losses, with AMD gaining ground from strong second quarter earnings results. We're also watching those oil-related stocks because we saw those gains in WTI in the New York session. We continue to see that upside of 0.7% after Israel's military struck Beirut in response to a rocket attack on the weekend in the Golan Heights. And we continue to watch Treasury yields fell across the board. Of course, we're looking ahead to the Fed rate decision. But ahead of that, today, it's all about the BOJ. Take a look at how the Japanese yen is trading at the moment. We're seeing a bit of losses in the early Asian session, but this after gains against the U.S. dollar. And this, of course, coming at a time when we heard from Japan's new top currency official that the recent yen weakness has done more harm than good for the Japanese economy. When it comes to the BOJ decision today, most economists surveyed by Bloomberg expect the BOJ to stand pat when it comes to the interest rate. But, of course, we are watching very closely what's going to happen with those reductions of bond purchases. Now, let's bring in Takatoshi Ito, professor of international and public affairs at Columbia University. He previously served as Japan's deputy vice finance minister. Ito-san, it's so great to see you here in the Tokyo studio.
Nice to see you in Tokyo.
Welcome. Let's talk a little bit about the expectations for today, because I think you sort of changed your mind overnight about the potential rate hike. Tell us why.
So the main scenario until yesterday was that rate hike will be not decided today, but in September. However, there was a scoop by Nikkei at 2 a.m. That the board will discuss the rate decision. And discuss means that they may decide, right? And this happened before the Nikkei 2 a.m. scoop. And that turned out to be right in the previous times. So I think market is now trying to read the scoop into the market. And so main scenario today, this morning, is that they will make a rate hike decision today.
But what about the state of the economy? Because the consensus has been for, yes, some people, a third of economists surveyed by Bloomberg, do expect a rate hike. But the consensus was still for a hold because perhaps we're not seeing the economic dynamics that the BOJ wants to see so far.
Right. There's no boom or dynamics enthusiasm. However, the inflation rate decline, the gradual decline, has stopped, and wage hike is now spreading into the households, and probably consumption will rise. Consumption has not risen, but I think they can read that it will rise soon. So taking advantage of the expectation that they can explain that rate hike today.
How important is the yen factoring into this decision, do you think, particularly when it comes to perhaps the role that it plays in getting this virtuous cycle and getting that confidence back into domestic Japan?
Right. So the BOJ's main objective is price stability, not currency stability. However, that's very important variable, and when yen depreciation pass through to a domestic inflation, then they can act on that pass-through channel. So and plus there has been the politicians saying that yen depreciation above 160 is harmful. So I think BOJ is in a position that they do not want to appear that they were pressed into the rate hike by politicians, but there is a support from the politicians that once BOJ does make a decision on the rate hike, then they can say this has not been opposed by the society and the politicians. So they can use in one way or the other.
A lot of the data continues to point in the right direction, right? The labour market conditions continue to support the idea that we'll see sustained upward wage pressures. Are you confident that will translate to broad rebounds in consumption?
Right. So, yes, as you mentioned, the data shows this big hike decided in the spring offensive is now taking place and implemented. And that should make households happier and start spending more. And also there is a cash transfer from the government. So wage hike and government's handout of the cash, this should be good for the household consumption in the second half of this year.
Of course, the other thing that we're watching today is a decision when it comes to the scope of reductions of bond purchases. Right. The issue with that, of course, is that it could lead to higher long-term yields, right? Mm-hmm. How much is a good runoff in order not to undermine investments, household spending as well? Right.
So the reduction in JGB purchase should work on the longer side of the yield curve. And I think they are very careful not to make this reduction in purchase as a policy impact. So they try to say that this is a scheduled, they announce the schedule and they keep the schedule so that the market knows what's going to happen and it will not have the particular impact on the long-term rate. But of course, if they do the policy rate hike and reduction in the bond purchase, you cannot differentiate these two effects. So that's the downside of the taking two policy actions together.
Depending on the course of the runoff of the balance sheet and how high yields rise, I think Barclays was putting it at potentially the 10-year yield reaching 1.3% or so this year. What does that mean in terms of the government, in terms of servicing the huge amount of debt that Japan has? When does this become an issue?
Not soon, because the average maturity of the bond is 7 years and plus. So it takes 7 years to fully reflect those bond rate hike. And I think the gradual increase would not make those fiscal situation in the crisis. I think that may be better to have some discipline on the bond issues. So I think that aspect is not the problem if we are talking about 1.3 or 1.5, not 3 or 5. I think adverse effect is on the housing mortgage rate. That would go up and that will dampen the household investment into the housing. So that you have to be very careful on.
Professor Ito, really great to have you with us. Takatoshi Ito, professor at Columbia University, ahead of the BOJ. Of course, not just the BOJ, but also the Fed. And in a lot of ways, these decisions are sort of intertwined, right, when it comes to the impact across asset classes, namely FX, dollar-yen trading. A little bit sort of softer at the moment. Yen traders are expecting the BOJ really to kind of go big or go home. Garfield Reynolds leads our Markets Live Asia coverage and joins us now. So how big is the risk for dollar-yen, for the yen in particular, if the BOJ isn't as hawkish as expected?
It's a pretty big risk, especially overnight we had a strong gain in the yen, which seemed to come from both some geopolitical concerns that broke out with Israel's action in the Middle East. We also saw gold rise a lot on that. But then we had the new FX chief saying that the yen had sort of been too weak for too long, a bit of a shot across the bows of the market. So we had some strong yen gains on that. That sort of leaves it a little bit more primed for a reversal if the BOJ seriously disappoints. And the disappointment could be either because they don't do as much as expected at this meeting, or perhaps even more importantly, what sort of guidance do they offer going forward? If they hike or if they don't hike at this meeting, either way, how likely are they to hike going forwards? You could get a situation where they hike and say, okay, now we're going to wait and see what happens. That would actually also be yen bearish, because what traders are really looking for is a clear vision that the BOJ is going to normalise policy in a determined fashion. It's going to march forward from here, not that we're going to have more back and forth a little bit here and then 2 steps forward, 6 steps back. That's not what traders want to see for the yen.
Turbocharging this bond rally, right? There's not that many sort of bearish factors at the moment with that narrative as we head into the FOMC.
Well, yes and no. I mean, the market has got very keen on the idea that this will be dovish, not just with a capital D, but all the rest of caps.
Itself?
Yeah, they may be getting ahead of themselves again, especially, it's obvious that the FOMC needs to change its language fairly seriously from the last statement. The last statement talked about, the FOMC needs to have greater confidence that inflation is under control. If you're going to have the idea that they could cut or will cut in September, they've kind of got to throw all that away. Bloomberg Economics was pointing this out and saying they're going to need to reframe the conversation about, basically going to need to say, it looks like inflation is getting under control. We have confidence going forward, and therefore we expect that it could soon be time, to cut rates, especially given some of the employment concerns. Now, that's pretty hedged around what I've outlined. The Fed's likely to be even more hedged around. So again, it's going to be about interpretation. It's going to be about Powell's language. There's the potential that the market, especially after some of these corporate results haven't been great, is going to be a bit disappointed that the Fed is not as dovish as they had been hoping.
Garfield Reynolds, who leads our Markets Live Asia coverage. It is a busy end to the week. And coming up on the Asia trade, Daiwa Securities joining us. We take a look at Samsung earnings as well. We'll also be talking market strategy with Stanchart Wealth Management and State Street Global Advisors. Investors are bracing, of course, for those twin BOJ and Fed decisions. This is Bloomberg. Take a look at what we're watching when it comes to this sustained tech sell-off, right? Microsoft, of course, arguably the driver there, the Azure cloud services, part of the business posting that slowdown in quarterly growth in these numbers. Investors were really disappointed given the high level of anxiety to see sort of the payoff from the huge investments that we've seen across AI products. We also saw in perhaps an even starker indication of how big this sell-off is, that AI narrative kind of sweetheart of Nvidia taking tracking just the volatility that we've seen in this stock, right? Currently up by 5%, but certainly this surge and then a slide of 7% on the Tuesday session, the biggest drop in more than 3 months, and a pretty big wipeout when it comes to market value. We also saw quite a big move when it comes to Intel as well. We're seeing some upside there as they vowed to cut thousands of jobs to cut costs and fund that structural rebound. Let's get more from our Bloomberg Senior Tech Executive Editor, Tom Giles. Tom, there's so much action, price action, in your individual kind of idiosyncratic corporate action going on. Yeah,
thanks so much for having me. Microsoft out today with its second quarter results. And you would think that an increase of 29% for most companies in revenue would be great news. In the case of Microsoft, it was disappointing. It's down from 31% in an earlier period. And what that speaks to is the fact that there is so much built up anticipation and expectation around these companies to deliver results when it comes to artificial intelligence. There's been a lot of hype around it. There's been a lot of optimism that generative AI is going to fuel a revolution in terms of these companies' abilities to generate growth, not just generate fast growth, but generate accelerating growth. And what you're seeing in after hours trading with Microsoft, those shares down a few percentage points, is the fact that it just wasn't quite as fast as some investors had been hoping.
One of those companies that sort of fell behind despite the AI exuberance seems to be Intel. Are these news stories right now that we're seeing that Haidi mentioned about those job cuts part of remaking of the company?
Absolutely. Intel has fallen behind some of its other companies in terms of the most advanced chip-making capabilities. Also, it has lost market share in key areas. So it's taking this step. Thousands of jobs that are due to be cut. We could get the announcement as early as this week. People familiar with the matter told us just today. And the reason being twofold. One, they've got to reduce costs. When you're dealing with unpredictable demand in certain areas of your business, you've got to find ways to rein in costs. And also, you've got to pay for the new plants that you are building in order to move into new businesses. Never before have they made chips for other companies. That's a new business for them. To do that, you've got to build plants, and those plants cost billions of dollars. At the same time, I was saying earlier, they've fallen behind in the most advanced technologies, so they've got to invest considerably in research and development so that they can basically be prepared to make the most advanced chips that their competitors are already well advanced in.
Senior Executive Editor in Technology, Tom Giles, great to have you with us. Another company that we're following that has sort of fallen behind when it comes to making those very advanced chips is Samsung. We're getting earnings results within the hour. We're expecting to see it report its biggest jump in net income in at least a decade. Of course, we have seen that semiconductor division soaring on that demand for AI supporting data centers. South Korea exported the most semiconductors on record in June. And we have also seen some prices of DRAM and NAND gaining ground. So we'll be watching those results within the hour. We have more ahead on the Asia trade. This is Bloomberg.
Well, the latest Bloomberg News Morning Consult poll shows U.S. Vice President Kamala Harris wiping out Donald Trump's lead across 7 battleground states. Data showing that Harris is riding a wave of enthusiasm among young, Black and Hispanic voters. Bloomberg's political news director Jody Schneider joins us now for more. We're also seeing some immense fundraising when it comes to, white women that have come together. Even as our Bloomberg headline says, white dudes raising $4 million for Harris on these Zoom calls, right? So I know that polls, have sort of done us wrong before over the past few years, but what does this tell us about the momentum here?
Well, yeah, Heidi, this poll, our Bloomberg Morning Consult poll, was taken just after President Biden left the race. So this is really one of the first swing state polls. It's not a national poll. It's looking specifically at these 7 swing states, and it's one of the first to come out since it was clear that Vice President Harris would be leading the Democratic ticket. And it shows that, she is significantly narrowed that gap from where the Democrats were before, narrowed that gap with Donald Trump. And it's a toss-up race now. Formerly, when President Biden was on the ticket, they were really several points behind. Now it's a statistical dead heat in these swing states. So the Democrats are coming together. What we're seeing in these states is that Black, Hispanic, and young voters are propelling this, and they're propelling that enthusiasm and that fundraising that you mentioned, which was really lacking when President Biden was leading the ticket. People were not feeling enthusiastic. A lot of people were saying they just weren't going to vote. Now, it's a changed ballgame here with that statistical dead heat in those 7 swing states.
Yeah, we're just watching Vice President Kamala Harris speaking at a rally in Atlanta, Georgia. And Georgia, of course, one of those swing states where we've seen that gap narrow. But she still faces challenges. What are they?
Yeah, there's significant challenges. She is in what Donald Trump's pollster terms a honeymoon phase. She's new to the ticket. There was a lot of frustration, obviously, among Democrats about Joe Biden's age and his ability to really be able to run for president and to serve as president after that disastrous debate performance that was halting, that was kind of all over the place. And here you have a very accomplished 59-year-old woman. She's young, relatively for the ticket. She's vibrant, and she's bringing together parts of the party that had not been excited by the Democratic ticket. So there is that honeymoon phase. Also, it is still anybody's race. It's a statistical dead heat. So at this point, with about 100 days to go in the campaign, it really could be anybody's race. And there's still a lot of people who have not yet made up their minds and start really looking at this starting in September, even October, with the November 5th election. So there's still a long way for her to go. We still need to see who her running mate is, and we need to see more on policies. There's still some distrust with her, particularly on the issue of immigration and the border with Mexico.
Right, Jody Schneider, Bloomberg's political news director, there with the latest on the ongoing race for the White House in the U.S. Other stories that we're following. Israel now says it killed a senior Hezbollah commander with an airstrike on the Lebanese capital, Beirut. The strike was in retaliation for a rocket attack that killed 12 people on Saturday in the Israeli-occupied Golan Heights. Israeli officials say no further actions are planned for the time being. This helped to ease concerns of escalation into a full-blown war between Israel and Hezbollah. Venezuela's government has hardened its stance against protests over President Nicolás Maduro's self-declared election win. A senior figure called for the arrests of opposition leaders, while Maduro used a speech to accuse them of leading a fascist conspiracy involving the U.S. drug cartels and Elon Musk. We'll have plenty more to come. This is Bloomberg.
All right, take a look at how we're setting up. It's going to be a busy couple of days going into the end of the week. Of course, the BOJ decision today, some media reporting suggesting that we could actually see that rate hike. But of course, if that result isn't as hawkish as expected, we could see quite a bit of downside there for the yen, which actually did strengthen again in the overnight session. Also taking a look at our Sydney futures are setting up about 0.4% higher. So much focus when it comes to this tech sell-off continues to play out, right? New triggers to the downside. Microsoft's numbers, but we do still see some resilience, albeit with volatility in stocks like Nvidia and Intel as well. Japanese stocks looking like we'll see a drop as we head into that BOJ decision, as that decline coming as we have really just the start of some very closely scrutinised global policy events, right? And also watching those AI and tech names in the likes of Japan, the Korean markets and Taiwan as they come online a little bit later. Also watching China in terms of this fresh pledge from China's ruling Communist Party to boost consumer spending, making that a greater policy focus. President Xi Jinping leading that meeting of the powerful Politburo. Our China correspondent Min Min Lo joins us now from Hong Kong. So, Min Min, what stood out to you when it comes to this readout?
I think it's clear that the government knows what is not working in the Chinese economy. They had identified two key problems. One is the lackluster domestic demand, and the other is that challenging external environment, referring likely to those risks of tariffs that are targeted at Chinese exports. So what really stood out to me is the signal that there could be more stimulus coming in the second half of the year, the readout saying that there needs to be stronger, more effective macroeconomic policy, and this strengthening of counter-cyclical adjustments. And there was a big focus on boosting domestic consumption. There was not a lot of details as to how they will do that. They mentioned that there is a need to increase income and the spending ability of the lower and middle income group. A big part of that could be perhaps the expansion of that equipment renewal program that has already been fleshed out by the government. They had allocated an additional 300 billion yuan in ultra-long special government bond for that. Some experts say that it could look like also some form of consumption vouchers or subsidies to promote tourism, for instance. But the big question is how effective this would be, because very notably missing from the readout is any sort of language to suggest more support for the property sector. Instead, the readout had reaffirmed the existing measures of turning unsold housing into affordable housing to finish those uncompleted homes. And experts are saying that without a decisive upturn in the housing sector, it's going to be very difficult to lift consumer sentiment. And I think what's clear, though, is that infrastructure spending is going up in the second half because the government did urge a speeding up of the issuance and spending of local government special bonds, and spending so far has still lagged behind in the first half of the year.
And we're, of course, getting the PMI data for July later today as well. What are we expecting?
Yes, the forecast is pointing downwards from the previous months for both the manufacturing and non-manufacturing PMI. Factory activity expected to contract for a third straight month. 49.4 is the consensus versus 49.5 in the previous month. We are still expecting exports to be the bright spot. We're seeing prices for export shipping containers increasing in early July compared to end June, and that suggests perhaps also, manufacturers continuing to front-load exports just ahead of those new batch of tariffs that are kicking in from the Biden administration's new tariffs. But at the same time, if you look at domestic demand, that's still very weak. Retail sales in June was at 2%, far below expectations, likely because of the very weak housing market as well. So big question as to whether the new policy directives from the Politburo meeting will go some way to balance out the economy again and lift consumer spending.
Bloomberg's China correspondent Min Min Lo there. Well, traders are also looking ahead to Australia's latest inflation data. That's due out later today. Clues on the RBA's future rate decision really at stake here. Our economics reporter Swati Pandey joins us now in Sydney. So it'll be very interesting in terms of this kind of just adds to the narrative that while everyone else is starting to kick off or talk about easing, that the RBA may still have more tightening to do.
That is right. It is the RBA is certainly in a hard spot. They have to choose between one of the least evils, and it is indeed going to be a difficult decision. And today's data is really important because other economic data that we have received so far in the past couple of months is a bit mixed, but still on the stronger side. So if today's inflation report suggests that the disinflation trend that we were seeing at last year and kind of like the start of this year has stalled, it's a very worrying sign for the RBA.
As you say, it's a balance of risks for the RBA, right? How is the household doing? Because we know that there's a lot of people, screaming for rate relief at this point.
Households are struggling. People, especially who have mortgage, they have a very large proportion of their disposable income going into bank repayments. But we got tax rebates at the start of July. People have also got rent assistance. There's energy rebates as well. So it does look like consumer is in a better position in the second half of this year. And we also had retail sales data for June, which was strong. I mean, it kind of points to the fact that there are people who are retiree seniors who are or self-funded retirees who are pretty well off. People who own their homes outright are also doing well. It's really younger people and people who have mortgage at this point are struggling a lot.
Our economics reporter, Spuddy Pandy, there with a preview of the CPI numbers and, of course, those implications for the RBA. We're also watching commodities given the weakness that we've seen in metals and mining prices over the last few sessions. And Rio Tinto announcing that first half underlying profit of $5.8 billion. That was narrowly short of estimates. Bloomberg's Paul Allen joins us now for more. So this is, of course, in the context of broadly weaker commodity prices. How's Rio positioning?
Yeah, well, it definitely had an impact here. On year, well, profit did grow slightly, 1.8%, but as you say, 5.8 billion underlying profit, a narrow miss. The market was looking for 5.89 billion. The interim dividend, though, exactly where it was this time a year ago, 177. But if you look at Rio Tinto, so much of its revenue comes from iron ore, around about 60%, and we've just seen that iron ore price grinding lower all year. It was $125 a tonne at the start of the year. Now it's $99 per tonne. So lower prices really weighing here. Lower shipments as well, because there was a train collision in the Pilbara in May, which affected production also. That said, Rio Tinto maintaining guidance for the full year, 323 to 338 million tonnes. It sees increased copper output as well. And we've just heard from the CEO, Jacob Stausholm, on the call. He's saying aluminium demand is absolutely relentless, his words, and he sees that growing more than copper.
In terms of spending, I do wonder how that's sort of affecting confidence, right? There are some projects that they're prioritising.
Yeah, huge projects coming down the pipe for Rio Tinto in the next few years. The big one is the Simandou project in Guinea. All the conditions for that have now been satisfied. This is a joint venture with a Chinese consortium, with the Guinea government as well. Rio Tinto's share of costs in that project expected to be around $6 billion. Should start producing within 18 months, so sometime towards the end of next year. But then when it really ramps up, the annual capacity will be 60 million tonnes per year. Obviously, that's going to have an impact on iron ore prices with so much extra supply coming to market at a time when Chinese demand is sluggish as well. So that's a factored away. But Rio also spending on other projects as well. It's moving ahead with lithium mines in Argentina, Canada and Serbia, and bringing on new iron ore mines all the time in the Pilbara in Western Australia.
Paul Allen there joining us from Sydney. In fact, we do have an interview with the CEO of Rio Tinto Thursday on these times on your screen. Now, these are the latest from the corporate front as well. Nomura Holdings profit beat expectations as Japan's record-breaking stock market rally fueled wealth management results and trading. Net income tripled from a year ago, building momentum for CEO Kentaro Okuda, who recently introduced a goal to double pre-tax earnings by 2031. Nomura sees wealth management growing as people shift more of their savings into investments. Starbucks rallied in after-hours U.S. trading after reaffirming its full-year guidance, suggesting turnaround efforts are starting to stick. While global same-store sales were roughly in line with expectations, the metric disappointed in China. Starbucks also confirmed activist investor Elliott Management has taken a stake and talks have been constructive. Prada reported a jump in sales for the first half of the year, bucking a wider slowdown in the luxury industry. The company says net revenue grew 17%, which was in line with estimates. It also noted a 65% surge in its second quarter retail sales in Japan, helped by strong tourism flows. We have more ahead on the Asia trade. This is Bloomberg.
Let's get you straight to these Samsung numbers just crossing the Bloomberg. For the second quarter, that net number at 4.64 trillion won. The estimate was for 7.97 trillion. That was already expected to be the biggest jump in net income in at least a decade, and that is a much stronger rebound than even that was expected. Of course, so much of this being driven by the semiconductor division, soaring demand for AI supporting data centers. We're seeing Samsung, of course, the biggest maker of memory and smartphones, really getting a big lift from this boom in spending on data storage there. Second quarter chip sales also beating expectations at 28.56 trillion won. We're seeing that split off when it comes to the mobile networks operating profit at 2.23 trillion won. A little bit of softness there. The chip operational profit there at 6.45 trillion won, also beating expectations there. Second quarter sales more broadly coming in at just over 74 trillion won, and operating profit at 10.44 trillion won there. Some further sort of splitting out of those operations, including the display operations profit, also really handily beating expectations. A little bit of softness there when it comes to consumer electronics sales as well as the operating profit. Let's bring in for some analysis. Our next guest has a buy rating on Samsung. SK Kim is the Executive Director and Analyst at Daiwa Securities. SK, really great to have you with us. What do you make of these numbers? What's really jumping out at you?
Samsung just announced the detailed breakdown of the second quarter earnings. So, as you mentioned, some earnings surprise driven by the semiconductor, especially I think that there's a memory division recorded strong earnings. So thanks to the price hike, maybe I assume some sizable reversal of inventory write-down from ASP increase. But some smartphone business and consumer electronic business was a little bit disappointing. Looks like a cost burden from the component price hike. It's putting pressure on its profit.
Yeah, it's interesting, the divergence, isn't it? Because when it comes to chip sales, really a number of these chip-related businesses really comfortably beating estimates there. Do you worry that this might be hitting a peak, given the patience that seems to be wearing thin for investors that want to see that payoff for how much they've spent on AI-related investing?
That is correct. We see some conservative investment sentiment on AI. But in case of Samsung, actually Samsung, they are enjoying some AI-based smartphone sales ahead of Apple. But also in case of the semiconductor division, still they are waiting for some qualification from Nvidia. So actually, Samsung is not much involved in the AI semiconductor. That's rather the memory cycle-driven earnings rebound. So we see Samsung is relatively underperforming. So because of that, we see Samsung is more comfortable at this juncture.
Yeah, Samsung now saying that memory demand will remain strong in HBM, DDR5 SSD as well in the second half. But when it comes to those advanced chips, how much progress are they making in trying to catch up with the smaller rival SK Hynix? We've seen Samsung stock lagging behind them.
Yeah, actually, the thing is that the price hike is the HBM is a premium product. But we also see very strong rebound in commodity prices. So Samsung has larger capacity. They are number one market share in global memory capacity. So actually, they can enjoy the price hike for the commodity product. So I think that the HBM, the AI-related business is more like sentiment. So if the Samsung can get qualification from Nvidia within third quarter time frame, that also positive sentiment for the share price, because they are not much involved in this AI related boom.
But that's the issue, right? Getting certified by Nvidia right now on those HBM chips. How many of those issues, like inadequate cooling, for example, have been resolved so far?
Yeah, actually, they has been delayed in the qualification, and also even after qualification of HBM3, there are some some additional issues. But I think Samsung they finally resolved the issues with HBM3, and they started supplying to Nvidia recently massively. So that is mainly used from low end or low cost product, so H20. But going forward, I think that they are already completed some internal progress, which means they largely meet the spec requirement, and they're waiting for a response. So I think there is some chance to that the company can get qualification. And also Nvidia they need some diversifying suppliers to maintain their roadmap.
Yeah, Samsung saying that they will expand capacity to raise the portion of HBM3 sales in the second half as well. Will that really help when it comes to those advanced chips and making that progress with Nvidia, making that progress in R&D help Samsung stock catch up?
Yeah, I think actually right now the technology development is already shifting to HBM4. It's a next generation HBM product. It's coming from second half next year. So this is there's some major changes to using logic die within HBM chip. And also the second generation of HBM4, I think that we should consider the hybrid bonding technology. So my understanding is Samsung is aggressive for the introducing new technology to catch up its competitor and also to take a leadership in the fast-growing market.
SK Kim, good to have you with us, Executive Director and Analyst at Daiwa Securities, really breaking down those numbers that we just got from Samsung. You can also turn to your Bloomberg for more on those results. Go to TLIV Go to get commentary and analysis from Bloomberg's expert editors. This is Bloomberg. We have breaking news out of Japan right now. We are getting those retail sales numbers, year-on-year growth of 3.7%, beating expectations and also gaining ground from the previous month. On a month-on-month basis is also a gain of 0.6%. Now, we're also getting industrial production, but we're seeing month-on-month a contraction of 3.6%. The preliminary figure for the month of June, year-on-year, is a bigger contraction of 7.3%, which is also a bigger contraction than was expected by economists on a year-on-year basis. But what we'll be really focusing on is the consumption side of things. So those retail sales numbers that I told you about, those are the key numbers today, up 3.7%, beating expectations by economists. Because, of course, what's been really holding back the Bank of Japan when it comes to normalizing policy, when it comes to hiking rates even further after its first rate hike in 17 years back in March, has been the stagnant consumption, the stagnant household sentiment. And we're now seeing that sort of a change in dynamics happening with retail sales growing year-on-year by 3.7%. So, Heidi, it's really been about wage growth and how that's leading to consumers in Japan spending more, despite the fact that inflation, of course, has been really hurting their pockets. We continue to watch the BOJ today. We're going to get that decision. The consensus right now is for no change in the rate hike, so a rate hold, but we're watching the reduction of bond purchases. But as our guest earlier today was telling us, Takatoshi Ito from Columbia University, we did get local media talking about board members discussing a rate hike in today's decision that could signal potentially a hike to come, a surprise potentially later today, Heidi.
It's a hard space to be in if you're a yen trader at the moment, right? Just bracing for so much volatility. Potentially, if the messaging or the policy measures are not as hawkish as expected, we could see quite a bit of pain ahead for the yen, even as we saw that big jump in the overnight session, right? And in fact, if you take a look at really sort of volatility levels, you can see just how much we're bracing for massive moves in the yen today, and expected volatility over the next few hours is the highest so far of the year. But as you mentioned, it's not just the BOJ, it's also of course intertwined when it comes to Fed expectations as well, and how much sort of dovishness is really priced into this decision. You see that with the kind of turbocharged rally that we continue to see in treasuries and in the bond markets, the sort of expectation that they'll hold and signal that September cut is pretty well priced in. Certainly quite a few sort of members of this market that actually do expect potentially even a move this week from that 2-decade high where rates are at the moment, right? But September is kind of the base case. This market will want to see kind of pretty convincing details, right, from the FOMC and Fed Chair Powell.
Yeah, that is certainly really leading to Treasury yields falling across the board, right? So that flight to safety that we continue to see really taking away some of that exuberance that we've seen in the equity space. Take a look at some of the markets that are near correction territory already. We're talking about the NASDAQ 100, for example, about 0.9% away from that 10% decline that would put it in correction territory. Of course, China has been really trading sideways for most of the year, and there is really a lack of confidence when it comes to the Chinese markets, but you can see the Shanghai Composite more clearly there, also very close to correction territory. CSI 300 about 1.5% away.
Yeah, taking a look at some of the other markets that are really struggling as well. You mentioned that sort of China impact. The valuations could be compelling at this point, but really investors still staying away, right? We said, had that readout from the Politburo, from President Xi Jinping, really vowing to make consumption growth, boosting consumption over tech as that short-term priority goal. The Golden Dragon China Index trading on the NASDAQ, we're very, very close to that bear market there, as well as tech stocks trading in Hong Kong as well. The Philadelphia Semiconductor Index is still a little bit away, but certainly you do wonder whether some of these, robust numbers out of Samsung, for example, that profit that just came through over the last sort of 10 minutes or so, the fastest in years with the chip operations recovery, whether that's going to kind of change that broader narrative. Well, the market opens on this very, very exciting day. Coming up next, Sydney, Seoul and Tokyo coming online in the next few minutes. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens after a risk-off session on Wall Street. Haidi, of course, we've been watching those tech mega caps. We also had rising geopolitical tensions in the Middle East, sending oil higher. But of course, it's really about the central banks, isn't it? And the Bank of Japan starting it off today. Expectations for no change in the rate hike, but potentially more details on those bond purchase reductions.
That's why, Shery, I was like, what's going on? Not much going on, right? Pretty quiet day, not at all. So much potential for volatility, particularly when you take a look at levels of the yen, right? That volatility expectation is at the highest that we've seen all year. We could see quite an ugly correction, if you will, if the BOJ disappoints.
And we already heard from the top FX official here in Japan talking about how a weak Japanese yen has caused more harm than benefit to the Japanese economy. The consensus was, as I said, for no change in the policy rate. But of course, we'll be watching those bond purchase reductions. But overnight, we also had local media reporting about board members discussing a potential rate hike. So our guest earlier on the Asia Trade telling us that potentially that could be a signal for markets to prepare for a change. and a hike in the interest rate. And we, of course, got also eco data just a few minutes ago showing that retail sales beat to the upside, growth of 3.6% year on year. What does that say about perhaps more resilience in the consumption side of things, adding to perhaps more speculation that the BOJ might be ready to move? In the meantime, we're seeing that downside given the risk of sentiment that we heard from Wall Street. Take a look at how the Kospi is also coming online because it was a risk-off session this week. We will continue to watch, of course, Samsung as well, that handily beat expectations. The biggest company on the Kospi, we're seeing now gain 0.2%. The Korean won holding steady, Haidi.
Yeah, take a look, Shery, when it comes to what we're setting up. The start of that cash session, just staggered open, of course, for the ASX, but it is really a data sort of compelled day, if you will, given that we do have the CPI numbers, and that's really seen as kind of the data point that might make or break these expectations as to whether the RBA might be forced to tighten again in August. Remember, everyone else pretty much around the world is starting to either kick off or really be very close to kicking off their easing cycles, but that persistent inflation factor is still proving to be problematic for the Reserve Bank of Australia. So watching those CPI numbers, we have seen, of course, that weakness across miners. Whether or not that might see a bit of a turnaround for the likes of Rio Tinto is one we're watching today. The half-year profit surging, or edging higher, I should say. There's probably a better characterisation, despite some sort of underlying China slowdown woes there as well. We're seeing the Aussie dollar holding pretty steady, 65.40 at the moment, a lot sort of depending on where the Fed goes with that FOMC decision. As Shery mentioned a little bit earlier, Samsung Electronics reporting its fastest pace of net income growth since 2010. Of course, it is the AI boom lifting earnings at its chip division. For more, let's bring in Bloomberg's Avril Hong. So there were some surprises, of course, some comfortable beats when it comes to the chips business, a bit of weakness across consumer electronics, and a surprise for the display unit.
Yeah, we really saw Samsung performing well in terms of knocking things out of the park with the net profit at $6.96 billion. It was well past estimates. But as you mentioned, when we look at the chip sector, that's really where we see it exceeding expectations. And I think this speaks to the recovery in the memory market, the AI boom, and in terms of net income or operating income, I think for the quarter, this was the best for Samsung since the COVID era peaks of around 10 trillion won, as our tech team has been writing about on the blog. And the demand for the memory market in the second half is still expected to be strong, given demand for AI servers and related products. Second half, smartphone demand, that's also expected to be rising. And displays, as you mentioned, Heidi, that is also another sector that really came in well above expectations.
And what about when it comes to the AI memory chips for Nvidia? Of course, Samsung has faced some challenges in trying to catch up with SK Hynix. Are we getting more indications that potentially they're close?
Yeah, Shery, I mean, if Samsung wants to become a serious player in AI and high bandwidth memory, it's really got to get these approvals from Nvidia for its latest chips. And it's, as you say, faced a series of setbacks recently. What we're hearing is that negotiations are underway, and it sounds like there could be some headway made in terms of approval by November. But AI chips are highly complex products, so there are a lot of uncertainties surrounding these possible approvals, and some analysts actually point out that this could actually stretch the timeline into next year. So for Samsung to kind of close the gap with SK Hynix in terms of high bandwidth memory, of course, this is an area that has been lagging its chip rival in. We'll have to keep a close watch on that. Shery.
Bloomberg's Avril Hong there in Singapore with the latest on Samsung. Now, of course, it's BOJ Day, and Governor Kazuo Ueda will be under intense scrutiny today when he unveils the central bank's plans for quantitative tightening and possibly another rate hike. Our Japan economy and government editor Paul Jackson joins us now with the latest. And Paul, how exciting will this policy decision be, especially with the reports overnight that board members could discuss a rate hike?
I think it's going to be a very exciting day today. We've got lots of action already promised by the central bank. They're going to unveil their bond purchase cut plans. But I think attention is really focusing on whether they're going to hike rates, hike rates or not. Bloomberg reported last week that there were some officials wanting to go push up rates. There are reasons to do that. We have LDP, that's the ruling party, presidential election in September. So if you don't raise the rates now, you might have to wait until much later in the year. July is a very popular month for the BOJ to raise rates. And one other key thing is we've seen some strengthening in the yen recently. Now, you might argue that, oh, well, that takes the pressure off the BOJ to raise rates. But actually, if you see the pattern that the BOJ followed when it was pulling back from YCC, when it was under market pressure, it defended. And when the markets backed off, it moved. And so the strengthening of the yen, actually, I would say, is a danger point. That points towards a rate hike today rather than a hold.
Giving the idea that, you know, we're not moving because of you guys, because you continue to short the yen.
That's absolutely it. So it's giving that, like, we're the BOJ, we make our decisions. It's got nothing to do with markets, although maybe it has.
But on the other side of the argument is that coming into today, waking up today, we thought the consensus was for a hold because, of course, of the economic dynamics, right? Are we seeing more signals that potentially consumption, households are starting to spend because you want that demand-driven inflation, right?
Yeah, well, I think if you look at today's retail sales figure, that they've been on the upside, so that's good. But don't forget, a lot of those sales are inflated by the price growth that we've seen. I think really today, what we're going to find out is Ueda drawing on Ueda the economist or Ueda the great normalizer? And I think there's a good chance that he's not going to wait for any more consumption data and he's going to be putting the emphasis on normalizing policy.
I wanted to sort of get to these media reports, right, that they'll be discussing the rate hike and potentially that sort of added more fuel to the fire. How much do we put in terms of waiting, given that we do know, you know, certainly under previous governors, certainly under Governor Kuroda, that the BOJ was very capable of surprising the markets?
Yeah, well, you know, as I said, Bloomberg first reported last week that there were officials looking to raise rates this time. It wasn't certainly across the whole spectrum of BOJ officials. There are people who are worried about the consumption data, wanting to see more evidence that it's time to raise rates. Obviously, the last GDP data was pretty dismal, showing that contraction at the beginning of the year. The next GDP stuff comes out in August, so we're still a ways off getting that information. But I think that those media reports last night suggest they may have heard something. So I think markets and people watching today's decision should start to have it in their mind that we're flipping from less than 50-50 to more than 50-50, that we're going to have a rate hike today.
And of course, the other factor that we have to watch today, which of course the last meeting was all about the bond purchase reductions. What are we expecting today in terms of details of how that will happen?
Well, they kind of blinked last month in not unveiling those plans.
That was confusing.
It would have made it much easier to get on with the bond buying reductions last month and then make space for the rate hike today. And that is, of course, one of the arguments for no rate hike today. That it's just too much information for the markets. And then they can't gauge what the response is from the markets because they don't know whether they're responding to the bond cutting plan or the rate hike. However, they're now committed to unveiling these plans. The consensus is a halving of the monthly bond purchases over a 2-year period. Now, the current pace of buying is 6 trillion yen's worth a month. Now, why is that important? It's important because if they continue to buy 6 trillion yen, the overall holdings don't change. So if you're going to cut below 6 trillion, which we are expecting, then that means the holdings of bonds of the Bank of Japan are going to go down. So this is a quantitative tightening move. Now, this stuff is not easy. Look at the Fed. They had to redo their QT plans after they went in too aggressively. And don't forget that the Bank of Japan owns half this market. So this is a huge whale in the pond trying to kind of swim away. The potential for ripples are still very large, even though we have this consensus view that they're probably going to halve the buying over 2 years.
Our Japan Korea economy government and government editor, I should say, Paul Jackson there in Tokyo. Let's bring our next guest who says dollar yen looks oversold short term and more dovish than expected lines from the BOJ today may stall the rally. With us now is Audrey Goes, ahead of asset allocation at Standard Chartered Wealth Management. And in fact, you know, that intervention risk is still looming, right, depending on whether the BOJ can really get not just policy settings, but the communication, the transmission of its messaging to the markets in a way that, you know, doesn't kind of just implode this rally that we've seen recently in the yen.
Yeah, totally. In fact, for today, I think the BOJ will be pretty hard pressed to decide whether it wants to hike interest rate at the same time as signaling the intention to taper off the bond purchases. And we think that it would do either one of the choice, basically either high rates or more likely scenario is to announce some tapering in terms of the bond purchases. Because if we look at real wages, for example, real wages is still quite negative, even though it has improved somewhat. And today's retail sales basically also sparked some hopes that, you know, the ongoing consumer recovery is still there. But having said that, we do need wages to catch up a bit more significantly for overall the emergence out of deflation into inflation by Japan economy to be sustained. So net, I think for this month, for this coming meeting later on, we are probably biased that they will probably just give some details in terms of powering back on their bond purchases and maybe stay pat on rate hikes for now.
Audrey, do you see meaningful impact when it comes to the broader sentiment for Japanese equities? We are seeing now bank shares rising, the reports about the consideration of the rate hike. We know that a lot of the mega banks are quite well positioned anyway.
Yeah, so we do expect rate hikes to benefit the banking sector. In fact, the overall banking equity, the overall Japanese equity may see a slight breather here, given that rate hikes, as well as a stronger yen, tends to weigh on Japanese equity market overall. But in terms of specific sectors, I think banking area is one sector that would benefit, given that higher interest rate, higher yields should also be able to boost their overall profitability through higher net interest margin. So that is the sector that we are constructive on.
What about the tech sector? We continue to see this rotation out of mega caps when it comes to global shares. What do you think about valuations at this point, especially when it comes to Asian hardware shares?
So I think we are seeing this ongoing rotation out from tech into the other sectors of the market. I see that as quite inevitable because if you look at where the performance has been, clearly tech, global tech has done really well. So it's one area where investors are sitting on profits, good amount of profits. So some rotation out to the other sectors shouldn't be that surprising. And if you look at where money has been flowing to, in fact, it has been flowing into the more cyclical parts of the market, for example, like real estate, financials, industrial, and even energy. So I see that as a sign of confidence in terms of economic growth outlook, because investors wouldn't really rotate into these sectors if they expect a recession near term for that matter. So I think the rotation is overall quite healthy, and we are also entering into a seasonally weaker sort of 2 months, April as well as September, when it comes to global equities. So one of our suggestions to clients is really make use of any of the pullbacks that you see maybe over the course of the next few weeks or even months to potentially considering buying on dips.
And before we let you go, Audrey, we had the Bloomberg News Morning Consult survey showing that Kamala Harris is really gaining ground in the polls right now. What would that mean for the global equity markets and just generally on markets headed into the November elections?
Yeah, so I think it has changed the polling slightly. So if we look at the latest polls, we can see Kamala Harris as well as Donald Trump being neck to neck. But I think more importantly, is that we've also seen a marked significantly downshift in terms of the probability of a rate sweep by the Republican Party in terms of the Congress as well as for the presidency. So I think what this means is, from a market's perspective, a divided government outcome is probably up in the play. And then the question is who is going to be the president eventually come November. And to us, the scenario where you have a Republican president together with a divided Congress is probably the scenario that deviates most from the current status. So on the back of that, actually, if we do get that happening, then what this means is things like trade tariffs, things like immigration curbs will be back on the table given the policies that Trump has advocated. So on the back of that, from an investment perspective, we might want to be a little bit more defensive in how we position our portfolio in terms of this risk scenario playing out where we get a divided Congress, and so maybe no tax cuts for that matter, and the expiry of existing tax breaks, and at the same time a Republican president who is quite hardline in terms of trade policy and immigrations.
Audrey Go of Standard Chartered Wealth Management there. Great to have you with us. We have more ahead on the Asia trade. We'll continue to watch trading in the Asian session, especially when it comes to those bank shares across Japan. Of course, we had news overnight from local media saying that board members at the BOJ will be discussing raising rates to 0.25%. We're already seeing yields gaining ground on that news, and the Topix Bank Index also getting a little bit of a boost. This is Bloomberg.
All right, take a look at some of the movers that we're following at the moment. We're seeing a broad move upwards for Japan banking shares. These reports that the BOJ is considering a rate hike today, of course, as we get closer when it comes to this decision. So much at stake, not just for the equities market, but perhaps more specifically when it comes to the levels of volatility that we continue to see for the yen at the highest of all this year so far. But take a look at the other stock that we're seeing, a little bit of a move to the upside. Rio Tinto up by just about 1% after those numbers came through. It still showed kind of broad resilience, right? That first half underlying profit of $5.8 billion falling narrowly short of estimates. Paul Allen is here with more. So, of course, this is in the context of weaker commodity prices.
Yeah, absolutely. And these results didn't blow anyone away. But as you say, it's done pretty well considering. Those weak prices really did weigh. Net profit, though, or underlying profit, still up 1.8% on year. 5.8 billion. It was a narrow miss. The market was looking for 5.89 billion, but the dividend held steady at $1.77. Iron ore is so important to Rio Tinto. It accounts for 60% of its revenue. Been a tough year there. The EBITDA for the iron ore division was 10% lower at the same time last year. This is due to a few things, mainly due to lower prices, of course. So we've seen the iron ore price come off quite a lot this year, but also lower shipments. Rio Tinto had a collision between trains in May as well, which affected production. But the weakness in iron ore was offset by some of the other divisions, which did very well. Copper output prices there held, and Jacob Stelsholm on the call earlier, the CEO, saying aluminium demand relentless and growing more than copper.
A lot in the pipeline as well.
Yeah, definitely. A lot of capex to come. Of course, the Simandou iron ore project in Guinea. But this is a huge project. Involves a Chinese consortium, the Guinea government as well. Rio's share of the costs in that project going to be about $6 billion. First production is going to be coming in about 18 months' time. But a huge amount of iron ore is going to come out of that, which will in turn depress prices. And at the same time, demand out of China has been weakening. The CEO had some remarks to say about that as well. He says he sees robust and stable demand from China, so perhaps that reassured the market a little as well. But Rio has other projects in the pipeline as well as it tries to diversify away from its reliance on iron ore. Some big lithium projects in Serbia, Canada and Argentina. And we got the shares responding pretty well, up about 1%, even though they're off about 15% year to date.
Thanks, Paul Allen here in Sydney with Rio. We're seeing a little bit of upside there. Let's get you caught up with some of the other corporate stories that we're following. Starbucks rallying in after-hours US trading after reaffirming its full-year guidance, suggesting turnaround efforts are starting to stick. While global same-store sales were roughly in line with expectations, the metric disappointed when it comes to China. Starbucks also confirmed that activist investor Elliott Management has taken a stake and talks have been constructive. Prada reported a jump in sales for the first half half of the year, bucking a wider slowdown in the luxury industry. The company says net revenue grew 17%, which was in line with estimates. It also noted a 65% surge in its second quarter retail sales in Japan, helped by strong tourism flows. Cosmetics giant L'Oreal reporting sluggish sales growth in the second quarter, though. Sales rose by a little over 5%. That was a miss on analysts' expectations. Revenue from North Asia, which includes China, also fell by over 2%, marking now the fourth straight quarter of declines. L'Oreal says the beauty market there faces weak consumer confidence. More ahead on the Asia trade. This is Bloomberg.
Take a look at how currencies are trading at the moment. We're seeing a little bit of pressure when it comes to the U.S. dollar. This after it rose to those levels that we haven't seen in about 3 weeks. We had haven currencies outperforming risk off, given that we are seeing escalated Middle East tensions, not to mention the pressure on U.S. tech shares. And of course, we do have a Fed policy decision and a BOJ policy decision. And it's really that BOJ policy decision that emerging market traders are really watching at the moment. Latin American traders, especially given that the yen has been one of the main funding currencies for carry trades in emerging markets. So the prospect of the yen appreciating, if we do get a hawkish Bank of Japan, will be key. So we had the Japanese yen, for example, rising about 5% this month, and the Mexican peso dropping about 2.5% or so. So you see that inverse correlation, Heidi, when it comes to the yen and the Mexican peso, and that's really risen beyond that 0.9 level last week.
Really interesting, Shery, what we're seeing when it comes to some of the price action within the Treasury market as well, right? This has really been a trade that has just been turbocharged by, amongst other things, Fed expectations that the tech sell-off, of course, that rotation, as well as some of the geopolitical concerns as well. We did see Treasuries just ending that Tuesday at some lower yield levels, that curve slightly steeper. We saw session lows during what was apparently a bit of a haven rally during the afternoon part of the session. We saw, of course, Israel carrying out that strike in Lebanon, targeting a Hezbollah commander there. So 5, 10 years, those yields touching the lowest level since March. But of course, a lot of uncertainty in terms of expectations for the Fed, right? Likely to move closer to lowering rates from that 2-decade high, but signaling that cut to come in September. We had Goldman Sachs really talking about potentially 2 rate cuts, according to the CEO, David Solomon. 1 or 2 later this year, looking increasingly likely. Take a look at what we're watching in Europe as well when it comes to the start of trading for stocks there, and really a lot of this is going to be sort of post BOJ and going into the Fed in terms of what are going to be the major drivers there. We're seeing German DAX futures modestly positive. This is Bloomberg.
Take a look at how JGB yields are trading at the moment, because, of course, we are watching the Bank of Japan. It's all about their decision today. Expectations, the consensus was for no change in the policy rate. But then overnight, we got local media reports that a rate hike was being discussed. So will this change the calculus when it comes to a potential rate increase? Today is the key question. We're seeing now yields gaining ground. Let's bring in our next guest to expect JGB yields to trend higher into 2025. With us now is Masahiko Lu, Senior Fixed Income Strategist at State Street Global Advisors. Masa, great to have you in the Tokyo studio with us. I mean, I woke up this morning thinking there's going to be no change in the policy rate, and yet we're hearing from local media that perhaps they're discussing a rate hike. Has this at all changed your expectations of what happens today?
We have a call that thinking of BOJ will hike this month, actually. Right, since last month, especially when yen hit 162. And, the rhetoric has changed. When yen was 140, 150, everything was going okay. But when it hits 162, the sentiment really changed within the country too, right? There's chatter regarding yen might hit 170, 180, maybe 200. But I think here, and the inflation backdrop is pretty okay. GDP's growth, is sanguine. I think BOJ, will likely hike this today, as per, the media reports.
Before coming into today, we're thinking perhaps that could be too much if you have an interest rate hike and then you have the bond purchase reductions as well, and we get more details of that as well. What would that mean for JGB markets?
Look, we're talking about 15 basis points hike, right? It's not 5% like the Fed, right? And then even with the terminal rate, the market is thinking of 0.5. We think like 75 basis points to 1%. But that basically means that yield will trend higher in Japan in a good way, right? It wouldn't. So BOJ, when they do something, we think today is going to be one of the blockbuster meetings that we have. What they want to do is they want to normalize gradually, in a very gradual way, without sending a big shockwave to the market, right? So JGB yield will gradually trend higher, but it wouldn't be like a very destructive moment to us.
What does that mean in terms of demand for JGBs? Who will be buying JGBs?
So JGBs, BOJ has bought from, they had limited amount of JGB, and through the past decade they have accumulated 50% of JGB market. Where did they get it from, right? They bought it from Japanese banks, Japanese lifers, right? Pension funds, and that money will technically flow back to those, investors, right? I think Japanese banks, if you look at the data pre-QQE, right, they held 400 trillion yen worth of JGBs. Now they hold 100 trillion. They have 300 trillion of dry powder, right? But then we know that there's stricter regulation, banking regulation. They might not be able to buy the full 300 trillion, but we think, 100 trillion, easy peasy, right? And then there's also National Pension Fund. There's chatter about them might actually, repatriate some of their foreign assets back to Japan. There's lifers in Japan, happily sitting at 30-year yields at 2%, a bit more than 2% now, right? So if we do see 20 years of JGB's yield trend up towards 2%, and I think lifers will be happy to come in. And there's also households in Japan, right, which have never seen, JGB yield, 10-year yield above 1% for the past decade, right? And there's foreigners too, right? Foreigners, they will focus on the front end, swapping it back to dollar or other foreign currency, and they enjoy a premium yield enhancement versus their own currency.
Masahiko, I wanted to get your views on the risks for the yen, right? Take a look at this chart, which really shows us that volatility over the next few hours when it comes to the yen are the highest that we've seen all year. So if you look at this, how difficult is it going to be for the Bank of Japan to not just get the policy expectations right, but the transmission, the communication of these expectations through, so that there isn't sort of a massive reversal of what we've seen in these yen gains?
Sure. I think that what is going to happen is, if BOJ remains, kept a very dovish message and say that, okay, today's hike is one and done, without signaling further, forward guidance, dollar yen will probably trend, a bit higher from here, right? I think it's a fat story, right? Remember what I said, right? We are only talking about 15 basis points, 15 basis points, right, of a hike in Japan, versus we still have 5.5% in the US, right? And I think if we do have a slower growth in the US, trending into 2025, a soft landing, and with a mild Fed cutting cycle, that will help dollar yen, as in that will help yen to strengthen a bit back, towards that 140, 135 handle.
Which crosses would you be looking at in that situation?
Which cross?
Which yen crosses would you be paying close attention to?
I think, dollar yen, the high beta one, right? But we are talking about dollar yen, pound yen, Aussie yen, those kind of high beta currency. If we do have yen strengthening back, a lot of this carry, trade will be unwound. We have seen the fast money going out of the market, right? You have seen Mexican peso, South Africa yen has actually, yen has rallied a lot versus those currency in the past month by 10% or so, right? So I think that will continue if we do have an unwind of the whole carry trade.
That's been a key issue with how interconnected the yen has been to global markets, right? I mean, any little swing in the yen, you can see really big repercussions for some of those currency crosses. What about the fact that you mentioned earlier, if we see more repatriation by all of these Japanese investors coming back home, what impact will that have on global bond markets?
I think that will be mildly positive for Japanese yield curve, right? Like the curve will flatten, right? People will be focusing on anything above 10 years in Japan, or the banks will be buying somewhere in the belly. But for global fixed income, right, it will be marginally negative, I think, right? Just because Japanese was a very constantly heavy buyer of global fixed income for the past 2 decades, right? And that flow will definitely, flow back to Japan, I think. Albeit not massively, but then it will gradually come back to Japan a bit by a bit.
When it comes to the Japanese markets, how much confidence is there that we could continue to see this interest and exuberance, whether it's equity markets or just Japanese assets in general, if it's not followed by a real reversal in the Japanese economy? And are you seeing that sort of demand-driven positive inflation that the BOJ wants to see?
I think it's coming, right? We do have the so-called supply push inflation from weaker yen, and from all the supply chain disruption that we had from COVID 2020. But the demand pull is coming back, right? We see there's more like wage growth, like hikes in Japan coming in, and that's feeding into a positive cycle, right? Like it's a vicious cycle that if people earn more, they get to spend more, and also there's a lot of inbound tourists in Japan, right? We're talking about we had 30 million people coming to Japan annually now, right? And Japan is bringing up double to 60 million, right, per year. There's a lot of spending power in Japan, and Japan, the first first half of Japan this year, we had a hiccup in GDP, but a lot of it was a lot to do with the auto scandals in Japan, right? Regarding auto production plunged a lot in Japan. I think that will drift back and GDP will recover into 2025. And I think that, the growth story here is pretty much still intact.
There's a lot of geopolitical risk as we head into the final months of the year, right? Do you think Japan is well positioned if we do see a return to some of the same kind of global trade thematics that we had with the first Trump presidency?
I think Japan will be, somewhat impacted, right? Don't get me wrong, everyone will be impacted, right? If we do have, a re-election of President Trump, and then what he promised is to have some universal, tariffs, that will send a shockwave to the global market, right? But to me, I think Japan is relatively shield from a lot of that, just because of how Japan has the supply chain, production has been shifted overseas for the past 2 decades, right? What Japanese corporations was doing best, right, was shifting a lot of this production overseas for the past 2 decades. And then Japan being a strategic alliance of the US also really helps. So in other words, to sum up, Japan is pretty much, relatively shield, right, from this whole geopolitical risk. It will be impacted, but to a limited extent.
Masahiko Liu, who's a senior fixed income strategist at State Street Global Advisors there in Tokyo. Take a look at how we're setting up when it comes to Asian markets going into what is really a significant day when it comes to event risk, right? Not just the Bank of Japan, but of course then also going into the Fed as well at a time when we're seeing a number of these global markets really on the cusp of already in bear market territory. Unsurprisingly, we're seeing that risk aversion playing out most steeply when it comes to Japan. Japanese stocks as well as bonds falling ahead of that BOJ decision, really potentially market-moving decisions from the Bank of Japan, and it is an event-packed day for the rest of Asia too, with Australia CPI with implications for the RBA, as well as PMI data out from China as well. The Kospi is seeing a little bit of upside there, some very strong numbers out from Samsung, particularly when it comes to that chip division, some weakness in electronics perhaps, but that wasn't kind of the lead on that story. And Australia up by just about 0.6%, looking at the reaction to the upside from Rio Tinto from ultimately what was a pretty resilient set of numbers given the broader drop that we've seen in global commodities prices. Take a look at some of the names we're watching when it comes to earnings as well, right? TDK is one of them, Murata. Some of the airlines in focus, ANI, particularly in light of some of the data suggesting that price cuts and global airfares have started to come down. Whether that's going to impact, we're seeing quite a bit of downside there for ANA Holdings, down by 3.25%, and also watching Oriental Land there as well. China's ruling Communist Party has pledged to make boosting consumer spending a greater policy focus as President Xi led a meeting of the powerful Politburo. Our China correspondent Min Min Lo joins us from Hong Kong. Min Min, so in terms of the readout, of course, a lot of it is quite broad. What sort of stood out to you?
Yeah, what really stood out to me is that big focus on boosting domestic consumption. I think that was given a lot more prominence than was expected. But the big question is what kind of policies and how will they be implemented? Because the readout was a little bit sketchy in details. It's clear the government knows that that is a big drag on the economy. It looks like a big part of boosting domestic consumption will come from the expansion of that existing equipment renewal program, with the government already fleshing out that they will earmark $300 billion yuan more in ultra-long special government bonds. But will there be more subsidies or consumption vouchers to boost travel and spending consumption, for instance? That's not very clear at this moment. And the other big thing that stood out to me is what was missing from the readout, which is any sort of language to suggest more support for the property sector. Instead, the readout had reaffirmed the existing measures, such as finishing those uncompleted homes and turning excess housing into affordable housing. And really, experts are concerned that without a decisive upturn in the housing market, then it's going to be very difficult and challenging to lift the consumer sentiment as well.
What about the PMI data for July that we're expecting today?
Yes, the forecast is pointing downwards for both manufacturing and non-manufacturing print. Manufacturing activity is expected to contract for a third straight month. We're expecting exports to continue to provide some support to factory activity. Prices for outbound shipping containers had increased in early July compared to end June, but then there's still more headwinds coming for exports as well because of those tariffs targeted at Chinese exporters. So that is a big uncertainty there. Domestic consumption not really picking up. You look at the June numbers, very disappointing numbers in retail sales. That was an 18-month low, I believe, and that's really driven by the weakness in the housing sector. New home prices declining at the fastest pace in 9 years in June, and that's led to this deflationary pressures, causing firms to cut prices on everything from your cars to clothes to food. So it really depends on what kind of policies will be implemented following the directives from this Politburo meeting.
Bloomberg's China correspondent Min Min Lo there with the latest on China. We have more ahead on the Asia trade. This is Bloomberg.
Israel has a right to defend itself, and I unequivocally support Israel's right to remain secure and to defend the security of Israel. What we know in particular is yes, it has the right to defend itself against the terrorist organization, which is exactly what Hezbollah is. But all of that being said, we still must work on a diplomatic solution to end these attacks, and we will continue to do that work.
US Vice President Kamala Harris said. Getting back to one of our other top stories, Israel says it killed a senior Hezbollah commander with an airstrike on the Lebanese capital of Beirut. The strike was in retaliation for a rocket attack that killed 12 people on Saturday in the Israeli-occupied Golan Heights. Israeli officials say no further actions are being planned for the time being. That's helped ease concerns of a wider escalation into a full-blown war between Israel and Hezbollah. And of course, we have seen some market reaction, namely across treasuries, as we saw that sort of haven part of the session after that attack was confirmed. We are seeing a little bit of upside there when it comes to trading across oil markets. We had an industry report showing another US stockpile draw, that API reporting that US crude inventories shrank by 4.5 million barrels. And of course, in addition to some of the geopolitical risks here, seeing oil rising for the first time in 4 sessions. So really, that tumble, though, of the past 3 to 4 sessions has been to the tune of over 4%. For Brent, for example, WTI has been hovering kind of near that $75 level. So some of that broader growth concern out of the biggest importer of China still weighing there, with crude still set for the biggest monthly drop this year. Shery.
Yeah, Heidi. Other stories that we're following today, a new poll suggesting that Kamala Harris has wiped out Donald Trump's lead across 7 U.S. battleground states as the vice president rides a wave of enthusiasm among young Black and Hispanic voters. The Bloomberg News Morning Consult poll found 48% support for Harris and 47% for Trump. That reverses a 2-point deficit for Joe Biden before he withdrew from the race. However, the result is within the poll's margin of error, meaning the election is still a toss-up. Venezuela's government has hardened its stance against protests over President Nicolás Maduro's self-declared election win. A senior figure called for the arrests of opposition leaders while Maduro used a speech to accuse them of leading a fascist conspiracy involving the U.S. drug cartels and Elon Musk. Separately, Maduro told a Brazilian official he would release the full voting records within days after the opposition said he had hard evidence of fraud. Indian officials say more than 90 people have been killed in landslides that buried several villages in the southern state of Kerala. Hours of heavy rain triggered the disaster, and bad weather continues to hamper rescue operations. The first landslide happened at 2 a.m. on Tuesday when most people were sleeping. The Indian Army has been deployed to help with rescue efforts. We have more ahead on the Asia trade. This is Bloomberg.
Taking a look at some of the tech stories we're following today. AMD shares surging after the bell on an upbeat sales forecast. It sees third quarter revenue reaching $6.7 billion as new AI processors boost growth. The outlook suggests AMD is making headway in its pursuit of Nvidia, which dominates the accelerator market. Intel shares rising in late trade. The firm said to be planning to cut thousands of jobs to trim costs and to fund an ambitious rebound plan. Sources say the reductions may be announced as early as this week. Intel is set to report earnings on Thursday. It has been heavily spending on R&D to accelerate its technology and regain market share. All of this is, of course, coming as we see this steepening of that tech sell-off, Rad, with a number of these tech-related markets in various parts of the world being close to or near bear market correction. We're seeing the Nasdaq 100, for example, just 0.9% away from that correction territory. We're watching the Hang Seng Tech Index 3.3% away in this part of the world. Taking a look at some of those individual performers, and Nvidia has had quite a ride when it comes to just underscoring the sheer degree of volatility. We're seeing upside of over 5%. This coming after a 7% slide on Tuesday. That was the steepest drop in more than 3 months, and a wipeout of over $190 billion from market value. So even the hottest of the US stock when it comes to this AI boom has been more volatile than even crypto, according to our analysis. Watching Microsoft at the moment, the slowing when it comes to Azure, really testing investors' patience. We're seeing downside of close to 3% still. That slowdown in quarterly growth really weighing as investors increasingly want to see that payoff from the huge amount of investment they've made in AI products. We're watching a lot of the chip makers in this part of the world after the Samsung numbers there as well. Samsung Electronics itself up about 1.1%. Some pretty stunning numbers when it comes to the broader profit, surging 6-fold, largely due to the chip arm staging that recovery. Net income just jumping there and very, very easily beating analysts' expectations. The global computing story, of course, more broadly really emerging from that downturn. Watching SK Hynix, of course, the smaller competitor who Samsung is playing catch-up in when it comes to the development of these more advanced chips, seeing modest gains as well. We are also watching more broadly the banking sector, with HSBC set to report their second quarter earnings later on Wednesday. Analysts there are focused on how the bank will boost revenue even as rates come down. Bloomberg Intelligence senior analyst Francis Chan joins us now in Hong Kong, and so quite an idiosyncratic story when it comes to a lot of these banks that have exposure to the China market. What's the setup as we get into this earnings season for HSBC?
Investors will focus on how the new CEO, Georges Haidi, he can save costs for the bank to make sure operating jaws will keep in the limited negative territory And revenue is another point which is pretty critical, especially when the Federal Reserve is about to cut rates from next quarter onwards. And HSBC may need to resist that revenue downtrend by boosting wealth and transaction banking revenue, which some of those factors may have been baked in the consensus. But of course, the market is looking for more guidance from the management.
A lot of that NIM support has been from UK margins and the stabilisation in Hong Kong. Can these trends continue?
In terms of net interest margins or net interest income, in fact, we do see some signs of positiveness from the forward market. In fact, the forward rates indicate higher for longer rates, at least through the first half of 2025. That's also the parallel to or comparable to what the Standard Chartered has commented. So to HSBC, we are expecting very similar trends. Maybe margin downtrend is going to happen, but the scale of margin decline may not be as serious as we expected earlier.
Our banking and fintech senior analyst at Bloomberg Intelligence, Francis Chan, they were looking ahead to HSBC. We will be speaking to Noel Quinn, of course, the HSBC CEO. This is his final set of earnings, I should mention, before he steps down in September. We'll be going through, of course, the second quarter results, and that conversation is coming up at 12:30 p.m. if you're watching in Hong Kong. Busy day as we head into that Bank of Japan decision. That is it for the Asia trade, though. Our markets coverage continues with the start of trading in Hong Kong, Shanghai and Shenzhen, with the China show next. This is Bloomberg.